Hello, trading is closed on April the 9th. Today is April 10th, 2021. We always start with our disclaimer, review our calls, and then make our predictions and look at the long-term picture on the weekends. This is my trading plan for Monday, April 12th, 2021. I can be completely wrong, so please, any trade should be at your own risk. I'd appreciate it if you follow the rules of my channel. Should you need to contact me, here's my email address. Look for the pattern with the early high. This is it. And Monday's pattern also has the early high. I didn't make a call specifically for Friday. I said I didn't have anything saying the rally had to stop. And I was looking for the 41.36 area probably next week. Friday's pattern generated a new target, 4106.34, and unless we gap up smartly, that's my call for Monday. During the day, MEJT said this drop was false, but that price would retrace. Said this one blip up here was going to have to retrace. Now says this rally is going to have to retrace. There's your target. The mark, I guess, has a target of 41.39. He's basing it on his combo sell. We already have enough because he allows fudging on the last 3 bars. If we trade over last week's high by 1 cent, you don't have to fudge. You get regular 13 up because bar 13 can complete early. Get rid of this X and have a real bar 13. If it fails, it's supposed to fail in grand style. I think that's going to be hard to do because we're already over the upper Bollinger Band on the weekly chart, and prices tend not to stay there very long, but I've been surprised before. I didn't think we'd have a rally of nearly 2,000 handles in a year. Well, this is a futures chart, and you can see after doing nothing most of the day, we had this huge wall into the close. And as soon as the market closed, prices had a sizable drop, something like 10 or 11 handles. This is a signal, in my opinion, of forced purchases by people who didn't want to be short over the weekend. I think it's highly unlikely professional traders would say buy at any price when liquidity dried up towards the end of the week. I think the only ones buying here should be people who had to buy to cover short positions and just said buy at market. And once the market closed, those buy orders dried up, and that's why prices dropped. So I think this buying is done. The catch is it's possible new buying could come in Monday for a number of reasons. We have a pattern Monday which is normally positive. We have low of the day in the first bar, high in the last bar. And we have a new all-time high, and all these things can attract new buyers, not the ones buying on Friday, but new buyers. So it's kind of a 50-50 proposition, in my opinion, whether we continue the rally or if we gap down. If there are no new people coming in to buy, it is negative over the short term. If this is forced purchases, if people didn't want to be short, we should gap down smartly and ideally undercut this low and print the target. Well, this is the count I've been using, and it's a perfectly valid count, but it's not the only count. I'm going to make a slight change because I'm not happy with the way this wave A looks. Doesn't mean the count's wrong. I'm going to move wave A over to here. We still have an A, B, C with good fibs. Magenta B looks more like a wave B. And we now have an AB with a possible C into the close. Great fibs. So as far as the chart's concerned, you have good Fibonacci balance here at the high. And of course, the long-term picture has the hits at 38.2 and 61.8. So if we do top out at 41.36, there certainly is a wave count which would explain it. Well, this is the long-term count I've had for a long time. I've been counting this wave, and this wave as three-wave structures. I know other people count this as a 5. They're entitled to their interpretation. I can't count it that way. If this is the right count, then wave 5 ended about a year ago. And this is wave A down. Now, we're not used to B waves railing so much, but if you look at it from this perspective, at 41.36, you can see this is just a Fibonacci target of the prior rally, because at 41.36, wave 5 at the high is within 7 cents of where it actually printed. And of course, 41.36 is kind of a round number. So if we do stop at that number, there's your A, there's your B, right on the target of the prior rally, and then you'd anticipate a wave C comparable to A, which was about a 1,200 point drop in a month. If this is the right count, it's reasonable to expect something comparable to that, and if it's wrong, we'll just break through this top area here and the whole thing's going to fall apart. Well, Monday's pattern has the early high. We could gap down. Typically, it's a rally day with a final hour high, but failure is a straight line drop. For yesterday's pattern to occur at any day other than the Friday and the other place in the chart than a new all-time high, I think would be a clear interpretation. The wall began 45 minutes before the close. Prices dropped significantly soon after the close. It's a hallmark of panic buying by retail customers unwilling to be short over the weekend. Still is possible it's true, and if it's true, we should gap down, undercut the origin of the late rally, and ideally print the MEJT target. The catch is the low of the day was the first bar, the high of the day the last. It's a bullish formation. Additionally, a new closing high often attracts new customers over the weekend. The rally can continue. And rally legs aren't really supposed to end on Friday. I don't think that's the end of this leg, even though we don't have to go a whole lot higher. We're quite close to the 41.36 or so target. It's pretty much a 50-50 shot as to whether we gap down Monday. I think this target prints next week. Sentiment and valuation have been compatible for months with the top. The wave count's compatible with the target. Wave count's compatible at the target price, and we came within 6.5 points already. I've seen markets that look far worse than this maintain the rallies. That's possible. But if we do reverse from the area of the target price, there's a real potential for a sizable drop in a short period of time. So we have the pattern with the early high. It's normally positive. Failures a straight line drop. If we get the normal pattern, we're going to blast through my target, and I'm going to have to get my eraser out. But we're very close to very strong resistance for a pattern that goes back over years, and I'm anxiously awaiting to see what happens in the area of that price, and that's today's call.